Look at what's going on in El Salvador. He's even gone so far now as I think he's given out like 100 citizenships to
scientists, doctors, philosophers.
I love what he said. He talked about the immigration problem to the United States. He said, we need to ask ourselves, why are people leaving our country?
The things that are of real value to you, by putting capital behind them, you're generating positive return. Whether you see that in a portfolio number is to some extent less material. Your portfolio is going through the roof, but your world's collapsing around you. What's the point?
I think right now with the rise of the internet, we're becoming more globally connected, but more locally disconnected at the same time.
Even that goes through cycles. I mean, I'm watching local communities forming. Literally 10 years ago, we're not really forming.
There was someone on Twitter, a doctor, she posted a letter that she had gotten from the insurance company about referring over the COVID patients, and she had said if she would have referred all these COVID patients, she would have made $1.5 million. That's how much they would have paid her.
And people are waking to that, and they're saying, I no longer trust it. The reason that we need them is that you don't get asymmetry without them. You won't get the 80-20. Right? Because if everybody was the 20, there would be no 20.
Yeah.
Then everybody is like, there is like, how do you get 80% moving right with a 20% move left? Like, you can't have everyone leave. You have to have the anomaly. That's how you get the asymmetry. So for people like me who spend our time trying to find the asymmetry, we have to have the vast majority doing something. And for the most part, they're generally right.
Yeah.
You know, in herds, when the majority, we were talking about this the other day, right? Mike was talking about it.
Yeah.
The herd are typically right, but every now and then they're wrong. And so as an asset manager looking for asymmetry, you're just spending your time. It's like, I think it was Jim Rogers, was it Jim? I think it was Jim Rogers who said, look, he just waits for, he doesn't want to jump over like hurdles. He waits for the one he can just step over. And so you've got to be, it's like you're a surfer. What's it, every 7th wave, 9th wave, depending? Like
That it's good?
Yeah, it's something like that. I'm not a surfer, but I know there's some thing where it's like typically.
It depends on how many waves come in per set or something, but yeah, typically maybe the 2nd, 3rd wave are the best. Skip the first kind of a thing.
Yeah. So there's a patience that you've got to have. It's like you don't ride every wave.
Yeah, it's all timing.
And so you have to be patient and be like, okay, that's where the setup now is right, and I can see it.
Charlie Munger said the big money is not made in the buying and selling, but the waiting.
Absolutely.
Yeah.
Absolutely. So you have to have patience, and most people don't have patience. And you've got to have the ability to have that wherewithal to go left when everyone's going right. And those setups come along every now and then, but they're not that often, again, because most of the time the herd is broadly correct.
But do you think the herd is mostly broadly correct in certain periods of time? So what do I mean by that? Not to throw this out, but just maybe for a frame of reference, in a fourth turning type environment with generational theory where the hard times bring strong men, and then at the end, right, the weak men cause bad times kind of a thing. And so you might argue that we're sort of in this period in time where people are so far removed from the wealth creation aspect, right, that they start making just idiotic, stupid policies because they don't just understand the world. They never worked in that world. You're familiar with generational theory, right? So, I mean, it's a model. It's certainly not empirical. I don't believe it for everything, but it's one way to view the world. If you look at Germany, after coming out of hyperinflation and war reparations, the country was basically broken down to nothing. Very hard times created very strong men. And they became the economic powerhouse of Europe, right? Precision German engineering and German cars and all of that. We're 80 years later right now, and what is Germany doing? They're deindustrializing because you have people putting in policies that don't understand that those were the things that actually made them great in the first place. And that's just, one anecdotal piece of information, but generally, and back to the point of the question, maybe at certain points in time, finding that asymmetry because of bad decisions is easier. So maybe trying to find that in Germany 40 years ago might have been tough. Germany was doing great. But today you see these stupid decisions of shutting down your energy And then it's like, well, wait a minute, but you're going to need the energy. So do you think that's true, or?
I think it's 100% true, and I think you have cycles within cycles. That distribution that we just discussed, where you have roughly 20% of individuals that will move a certain way, and you'll have the market moving, say, 80% of the time a certain way, and those things are generally true, and they become, so there's a cycle pattern there. Within that cycle, you'll have the generational theory. So let's take this and let's just think about the business cycle, roughly a 7 to sort of 12-year cycle. Most everyone is relatively familiar with it, and so you can look at that as a cycle. Now, within that cycle, you're going to have individuals that profit. Often, that 20% will profit at the tail end of either. They'll profit from the tail end of either because they'll identify, oh, this is the end of that business cycle. This is when assets get cheap, and they'll buy them. And then and the opposite, they're too expensive, and they'll sell them, and vice versa. In fact, your Greek shippers have been extraordinary. Your Greek shipping families have been extraordinarily successful over generations doing that very thing, because shipping is a very cyclical business. It's extraordinarily capital intensive, which means it's debt financed. The debt markets themselves have their own credit cycle. The commodity markets, which the shipping space is typically tied to, has its own cycles. And so those individual families have often been able to just identify those particular cycles and just pretty much time them, right? So there's like your business cycle tied in with a longer term debt cycle, right? So the longer term debt cycle will simply exacerbate your existing business cycles. You're going to have a big business cycle at the tail ends of either of the debt cycle, which is often sort of 80-year cycle, right? Or sometimes there's a 30-year debt cycle as well. But so to your question, you have these broader cycles, and I think the same individuals or personalities will always exist, and they will just have an exacerbated result within the context of those cycles. And it's very unique in this period of time that you and I are sitting down now, in that we have multiple of these cycles all converging at once. And I know you've done a lot of fantastic work on this.
Yeah.
And we have a lot of those cycles that are all prevalent now. And what's really fascinating is that the longer the cycles, the less well known they are, which is for obvious reasons. A business cycle, you can grow up and you're like, oh, Dad lost his business, and then people have an impact within a business cycle where they can sort of identify it. Longer term debt cycles, they don't.
Yeah.
Because they're multi-generational.
Right. We know like 50 years. That's like our window.
Exactly.
Yeah.
And you might hear stories about grandma or grandpa and things, and if the curious of us will look at that and go, what does that mean? What happened? And investigate it, and then they'll see, oh, there's something going on here. And what happened to grandpa back then looks like it's kind of happening now. And they start piecing things together, and they're like, there's something going on here, brother.
Yeah.
But again, when you go in long cycles, like your evolutionary cycle, 250-year cycle, most of us have got no idea. So it's the very, very curious who look at that and go, are we there? And what does that mean if we are? And what are the probabilities? And so like for an asset manager like me, it's not just identifying the cycles. It's in large part, it's pricing the probability. Because it's not just like, oh, okay, we might have a crash in, say, housing. Now I want to go and buy cheap housing, right? So you can look for that. But it's like, what does cheap housing mean? What are the ratios? What does it need to look like? So there's two ways that you can go about it. One is just simply just looking for cheap value. And so you can take historical metrics and go, okay, we know it's roughly cheap at 2 times annual incomes. Right? And it's really expensive at 7, 8, 9 times. And anything in between is like, well, we're probably somewhere in between in the cycle. So you can do that, and then if you do that consistently, you'll go, oh, there's cycles here. Whenever it keeps getting cheap, every it's kind of a repeating affair that keeps getting cheap, and then it kind of keeps getting expensive. So you start seeing these cycles within, I'm just using real estate as an example because it's one that many people are more familiar with. But so you can do that, or you can look at the cycle period and go, okay, what does that look like, and what are the factors you look at? So I really enjoy looking at it from multiple angles. And so like my business partner in the fund, he's very, very good at just the granular, like what is cheap, what are the PE ratios, what are the sectors that are exhibiting these types of metrics that would ordinarily identify something as being worth looking at least. Right. And then I'll often look at that macro space and go, what is, like, where should I be? And very often we converge on something, and I'm like,
from different angles.
From very different angles, because we've got very, he's a mathematician, and so it's I think that's those, what you're talking about, those sort of cycles are they manifest themselves, they repeat. And
So what are the big cycles that you're seeing, the trends that you're seeing that you're sort of excited about with your fund?
Well, I think the largest, there's many. I think the largest that is worth focusing on is the long-term debt cycle, because it has probably the most broad impact. It's the largest asset class is debt, the debt markets. And we have this extraordinary setup where we have the highest levels of debt globally, and simultaneously we have the lowest relative interest rates, which is an anomaly. And
is it an anomaly though? Because isn't it the low interest rates that allowed for such high debt levels? As interest rates continued to get cut in half, debt was able to double.
100%. Right. Yep. It's just that in the past, often that has been corrected by various market forces. And so the market forces that we've had this time have often been overwhelmed. We had it in 08. Many of us looked at it and we thought, okay, this is going to correct a lot of that debt cycle. And guess what? They literally did the opposite. They flipped the switch and they flipped the switch and pushed it up. And so, then you have to recalibrate. I mean, I recall sitting, I had just exited a whole lot of real estate in November 06, because I'm like, this is fucking insane. This is right. I can't make a case anymore, and I couldn't find anything of value. So part of that was like I knew the values that existed weren't asymmetric on the upside, partly because I couldn't no longer find anything that made any sense to buy. And so like often it's like, well, if you wouldn't buy what you own today, why do you own it? Right? Because often we get caught in owning things that we own. But if you woke up every morning and you said, would I buy everything in my portfolio? I think that's a very good way to look at it.
That is a good way to look at it. I've never thought about that way.
Then you assess it from a different angle, right? Because you're not married. This isn't like something that you don't have to own it. You can get rid of it if you don't want it. And so when you view things from that perspective, I looked at the stuff I own, I'm like, no, I wouldn't buy this. Like, why would I buy this? And I'm like, well, that's obvious, I need to sell it. In any event, then we had and I didn't know that there was a crisis. There would be a crisis. I just knew the probability of upside for me was no longer there. And I knew that the risks that existed were growing every day. That was enough for me to go, I shouldn't be involved anymore. I have to get out of this. And then at the same time, there was nothing of real value that I could find. When I searched across asset classes, I really struggled. And you know what? So my default was to go to cash, but that was the asset class that was undervalued. So like by default, I ended up buying the deep value asset, which was literally cash. So there's many ways you can go about like kind of finding deep value, if you will. But further to the point, like that was in 08, and then when that hit, I was like, okay, we need this. We need a cleansing of the system. And then when I saw with the Fed stepping in and every imaginable 3-letter freaking, quantitative this and that, and like, I was like, this is what they're going to do. They're just going to push this thing hard and further than it should do, which is going to create an ever greater problem, but that's where they're going to go. Which then led me into saying, okay, what are the consequences of these actions that they're going to take? And for me at the time, the consequences of those actions were that capital was going to have to go to the far end of the risk curve.
Right.
Because the way that they were going to do that was to lower interest rates, which meant the debt was going to go higher, which we just alluded to. But the lowering of interest rates meant that anybody that was dependent on income from your bond market was going to be in trouble, which is your pension funds. And your pension funds and your mutual funds are humongous. They're trillions and trillions of dollars in value. And so these guys typically have to get roughly a 7% coupon just to live,
right,
just to stay aboard. How do you get a 7% coupon on a bond portfolio, mostly bond portfolio, when interest rates are 2 points? Yeah. So what it meant was they're going to have to take more risk within the bond portfolio, i.e. corporate debt, but even that was like, it was still like sub 7, even in the junk bond market. So the portion of their portfolio that they could take equity exposure, you had to take the greatest equity exposure imaginable just to try and live. So I went and set up a venture capital firm. I'm like, this is where the money's going to go. And that's where it went. So like you had
where?
Into high-end risk growth, quote unquote, growth assets. Silicon Valley shit, anything growth, right? And the more capital that poured in, there's also like there's a feedback loop in that if you put enough capital into any sector, you will see results.
Right.
It doesn't necessarily mean that net that's productive. Like you can have 80% of them all turn into garbage, and you can have some of them actually succeed and so on and so forth, but you can still have trillions go in, and you could have, let's just say, ease of numbers, 10 billion go in and 5 come out, right? So you've lost 50% of value, but the ones that are still like survive, people have done well in them. Mm-hmm. So, and to some extent you almost need that as a bit of like creative destruction. So like, you know, think about the .coms, we had tons of money pour into .coms, but look, it changed the world.
Yeah.
You know, there was a whole lot of people that lost a shitload of money, but you know, over time it changed the world. So we had a lot of money that was going into high-end risk assets. You just needed to see numbers, you needed to see growth. It was the whole eyeball stage. You know, companies that were getting more eyeballs, they get higher valuations.
Yep.
So like it didn't need to make, if you purely looked at it from PE ratios and cash flows and all this, it didn't make sense. But if you understood that cycle and you understood why the capital was going to flow a certain way as a consequence of central bank actions, like that's where it had to go. Like it didn't matter.
Yeah.
You know, if you're the asset manager running a pension fund, like what are you going to do?
Yeah.
Because part of it is like you couldn't. They can only invest in certain asset classes as a mandate. That's how it is.
Do you study like old insurance companies and how they invest for their capital? I've been thinking about the life insurance companies specifically and how dangerous it is for them to write the actuary tables, right? They have to really get good at like coming up with the time of death for those people so they can write risk properly. And some of these like whole life insurance vehicles, right? They guarantee a 4% or 6% return. Mm-hmm. But how do they get that in a zero rate environment? So they obviously were having
real estate.
They were having to move out further and further on the risk curve as well.
Yep.
But now with the pandemic and because of the COVID vaccine, I think they're going to be way off sides on their.
I don't want to be anywhere near them.
Yeah, so they're going to be way off sides on estimating those times of death, but also at the same time
their portfolios
they went so
are at
far
risk.
On the risk curve at the same time. So it's almost like this double whammy.
Yeah.
I haven't done a lot of research into that. It's something I've been thinking about. I'm just curious if you had looked at that at all.
I wrote articles about this in. Gosh, I think it must have been late 20, maybe 21, pointing out that there was risk within the insurance market. I don't typically delve too deeply. Once I can identify a risk, because my job is to make money, and I make money on the long side. We don't short. for the most part. Occasionally we may take some sort of option positions, but we never use leverage insofar as being fully exposed. So we might buy puts or calls, known exposure. But generally it's just a long only portfolio. So if I identify something where I don't want to be, it's very, very hard to actually be a successful short seller. They're few and far between.
A lot of people have lost their careers trying to do that.
Exactly, and like I've lost money doing it. And the lesson for me, just in terms of my own skill set, is just don't go near it. Know what not to touch. And if there is an asymmetry within that market, I need to find it on the upside. In other words, if X happens, what are the consequences? What's the second, third order thinking? If life insurance companies do fail on whatever, if the annuities fail, then what are the consequences? And is there anything that's then asymmetric? In other words, could I buy some particular asset that as a consequence is going to go really high? That's very, very cheap now. That's what's interesting to me. If I can't find it, I just walk away and go, okay, I know I don't want to be involved in that, but let me keep looking. I'm just going to keep looking for what actually represents value.
All right, I want to take a break just real quick and say that, as we're talking about Bitcoin and digital assets, the question really comes down to, are you tired of the global elites robbing you blind through, all this money printing that's happening? And if so, then you need to be holding your wealth outside of that. And more importantly, you should be coming to the Bitcoin conference in Nashville. The 2024 conference is happening July 25th through 27th. It's the largest Bitcoin, the largest fintech conference in the world. I've been going every single year. It's an amazing event, and Bitcoin 2024 really stands as a beacon of monetary freedom. If you care about that, if you care about freedom, all freedom sits at the freedom to transact. And really the darkening macroeconomic backdrop that's happening needs the Bitcoin more than ever. Now, there's going to be top speakers there, companies, thought leaders from across the industry. They're all going to be in Nashville, looking ahead for the future. And I'm going to be there. Lots of other people, my friends, are going to be there. And ticket prices keep going up. So the longer you wait, the more you're going to pay. But I don't want that to happen to you. I'd love for you to come hang out, meet me, hang out with me and all the other speakers there. And you can save 10% on your ticket by using code MarkMoss at checkout. So get your tickets now. Like I said, the prices just keep going up. Use MarkMoss at checkout to save 10% on your tickets, and hit me up. Let me know if you're coming, so I want to meet you. And also, while we're talking about Bitcoin, we're talking about laws being changed to basically guarantee your rights of self-custody. The whole piece about Bitcoin that's so revolutionary is that we can custody our own digital asset. And so you should certainly do that. But how? I've been using this device. It's called a Trezor hardware wallet. I've been using it for about 7-8 years now. It's been my go-to device. Basically, it's a little hardware device like this that holds your private key, and you plug it into your computer when you want to send a transaction. I like Trezor because it's open source, unlike some of the security flaws you've seen in other devices. I don't want to name them right now, but it's open source, so you know that it's safe. It's the easiest to use, which I have used it forever. They have new devices that make it much easier than ever before. There's no excuse for you not to secure your own Bitcoin with a Trezor hardware wallet or something else like that. And more importantly, when you're holding your Trezor hardware wallet or any hardware wallet for that matter, you need to back up your private keys. Now, you want to make sure that you back up your private keys and put them somewhere they don't get destroyed. And they've come out with this new device where I can put my private key on this metal device that could withstand fire, flood, or war, whatever it may be. So check out Trezor, what they're doing. You can save 10% on these things by using code MarkMoss. But either way, make sure you secure your own Bitcoin.
Let's turn to something maybe a little bit that you have a little more interest in, maybe a little more exciting. So you were talking about sort of a new focus that you have, potentially a new fund that you want to set up. So maybe, I don't know how much you want to get into it, but working on technology for sort of this regime change cycle that we're in right now. So we had talked about yesterday maybe like dissident tech, but you're also talking about like grain, crops, things like that.
Yeah, so it's kind of a side project, and it's not, I'm not running it. I'm partly the brains behind it. It's basically addressing the Great Reset, which is kind of, it's still amusing to me that when you mention that word, people go, conspiracy theories.
Yeah.
Like, it's literally, there's a book written about it, for fuck's sakes.
Called that.
I mean, called that. You have policymakers
YouTube
using
still
that
puts like a
terminology.
warning those up for some reason.
I know. It's mind-boggling to me how brainwashed people can be. But nevertheless, there is an agenda in play with respect to changing society fundamentally. I don't believe it's going to work for the same reason that communism has never worked. That doesn't mean they're not going to continue to push it. The solution to it isn't, in my book, it's not necessarily to fight it. I think it's very, very difficult to fight that force with the same strategy. If you think about the Wu flu mandates that were put in place, where you needed to get the safe and effective, otherwise you'd lose your job, and so on and so forth. In large part, the lesson that I learned there was that the solution wasn't to fight it face on necessarily. The solution was just to have an alternative. Mm-hmm. If you were, like, for example, if you were a school teacher and you were given this ultimatum, mm-hmm. and I had an option for you, and I was like, here, you can go and work here and do this.
Go to some homeschool pods or something.
And there is no requirement for anything to be mandated. And maybe it's even 60% of your income. There are many people who would have taken that path and said, yeah, I will do that. Mm-hmm. That's how I believe how you fight it. You build a parallel system. Mm-hmm. You build alternatives. Yep. It is the alternatives and the growth of those alternatives that allow for you to have optionality. When you have optionality, the power is taken away, right?
Yeah, I mean, that's the history, that's the model from history, right? I mean, the collapse of the USSR was really driven by those parallel markets that were created. And by people opting out, right? Because sort of there's the meme of like the political leader out over the cliff on the ledge with the piece of wood, and like the crowd standing on it. And if they move away, he falls, right? And so, like, as long as we give power to that system stays in power.
You just step out of it.
And so you just step out of it. So rather than trying to fight it head on, you just, I'll just opt out. We'll go over here. And so it does two things. I mean, one, it causes them to lose their power and their control over that situation. But two, when it inevitably fails, then there's this secondary system, this life raft, if you will, to like help cushion the fall.
So it's those life rafts that we're focused on addressing through a venture capital arm, where we'll be funding and resourcing existing projects, typically already profitable, that are addressing those. And it's across multiple avenues that are all being utilized as vectors of attack. Health, agriculture with respect to our food supplies. It's extraordinarily difficult now to find food that is not GMO, that is not laced with pesticides, that is not even, I mean, it's difficult now to find chicken that's free range, hasn't been laced with hormones to make them fat, and fed with corn all day long. Like the quantity of protein that our bodies require, we're gonna have to eat so much more of that garbage just to get the nutrients that we need. So there are already...
I'm trying to get 200 grams of protein a day.
I know.
It's hard to get that.
It's bloody hard. But part of that is like, and I've seen research studies on this. For example, you take a lettuce that was in the 1940s, I think it was the 1940s. In order for us to get the same nutrients out of a lettuce now, we have to eat almost 10 lettuces.
Yeah. Because the soil has no nutrients.
It's because the soil's been depleted, and largely it's been depleted through various interventions and so on and so forth. So anyways, point I'm guessing, and then of course healthcare is another one. So, and we're seeing already the market forces in play here. There are many people who are distrustful now of the medical industry, shall we say, for obvious reasons. And so now they're looking for alternatives. And the alternatives are cropping up, and they are getting enormous, because there's so few of them. It's like the asymmetry of supply and demand, right? I mean, we're seeing a lot of this in Mexico. I know you spent some time there. You know, because it's a less regulated market, and look, to some extent that's been the case for decades now. If you wanted to go and get stem cell research or stem cells done, things like that, that's been the place to go. You're not going to do it in the US.
No.
Anyways, so those sorts of things we're seeing literally as being quite asymmetric, and there is a value proposition there where basically I think that's part of that parallel system that we absolutely need, where you're being mandated and told you have to go and use these particular medical providers, and we know that those medical providers have a very biased opinion because the people that actually pay them aren't us. They're requiring other participants to literally have their license and their jobs.
Yeah.
And so
there was someone on Twitter, a doctor, who posted, went pretty viral a couple days ago, maybe a week ago, and I think it was she posted a letter that she had gotten from the insurance company about referring over the COVID patients, and she had said if she would have referred all these COVID patients, she would have made $1.5 million. That's how much they would have paid her.
Yeah.
Think about the incentives around that, so to your point.
Yeah. And people are waking to that, and they're saying, I no longer trust it. And so I'm looking for alternatives. So if there are none, that's a very bad setup because you're kind of stuck. But there are some.
Yeah, there's a lot.
And there's quite a lot more. And so that feedback mechanism is now working. You know,
and
Joey down the road gets something done, and he talks to Freddie, and the next thing you know, you got half a dozen people like, maybe that's not so bad.
Yeah, and I mean, just a general breakdown in the healthcare system overall. So I've just seen a big trend for more concierge type medicine. Obviously, there's a lot of medical tourism that happens, so people are paying for that medical stuff. So, and then you add this on top of that. So certainly an explosion there. You mentioned the food. Are those the two areas that you're thinking, like food and medicine?
Yeah.
What about communications? Because censorship seems to be like the number one attack vector right now.
It is.
You look at Elon Musk, like the richest man in the world. I mean, he's the attack vector right now, and I don't know how much longer he's going to be able to withstand the forces coming against him. You can see what's going on with censorship all around the world. Ireland is sort of maybe the tip of the spear, Brazil as well. But even in the United States, with the release of the Twitter files, we can see how the CIA has been using social media platforms and whatnot. So does that fall into that, or not the tech side?
At the moment, we're simply looking at that which we have in front of us, where we can get our heads around it and where it represents decent value. You know, there's an ideological approach in that we want and need a lot of things, but we're also understanding of the fact that, like, I'm a macro guy. I don't know shit about technology. Sure, I know how to use a phone, and I can read and I can understand broadly how Nostr works and how decentralized system, blah blah blah.
So trying to pick and choose winners in that environment.
I'm not that guy. I'm not that guy. So.
But you're that guy in medical and.
But within the no, not even there. But like within the network that we have, we're identifying participants that have those skills and have proven them. They're already doing things that are verifiable and are addressing these issues. And so our role is basically to partner with them and to network all of these various aspects together and basically build a better world. So that's the idea. So at the moment, you know, it's still relatively early stages. It's been quite a long time in sort of brain formation over the last 4 odd years. But for the moment, it's going to be like agriculture, healthcare. Those are the two that we've identified. There is a bunch of tech stuff that we have looked at, but it's again, this is not designed to be like early stage startup type stuff. You know, that in order to do that, you really need to be an expert in that. And I'm not, and my partners are not. We're business operators, you know, or I'm a fund manager. They're very, very successful business operators. So we can use the skills that we have, and then again within the network, identify individuals that we can partner with to move those things forward. So that's the broad.
Yeah, I love it. You know, something I talk about quite often. I mean, it's sort of a convergence of two things, but like one. Sort of like Warren Buffett's like deal box, where it's like, hey, identify the couple things that you know, like, or have interest in, you know, passionate about, expertise in, and just focus on that. You know, Buffett sort of preached a lot of concentration in that regards, right? And so I've found just in my own life, like things that you're interested in, you spend more time in, and to be good at any of these things, you have to spend a lot of time there. So that's number one. But even more importantly, I talk about you know, really building the world that we want, and really it's a message of personal responsibility. I know that we both share, but like if we want to change the world, it's like up to us. Like we can't sit back and hope that a politician is going to come save it for us. And so then, like utilizing our resources, our money potentially, and resources in order to build that world, right? So you see a problem with the food supply. Well, if all things were equal, why wouldn't I just invest in to help the food supply then? if I can make just as much money there as I can buying China stocks or whatever else, like why wouldn't I put it there? And so that's something I talk about as well, right? Like specifically around the Bitcoin fund that I have, and just in general, right? It's like we have to put our money up where our mouth is, right? We have to invest into making the world better for ourselves, and you know, maybe not so much in this case, but even maybe just to the listeners I talk about, even if that means you get a lesser return, or maybe you might even lose a little bit. Like that's sort of the battle that we're fighting today, right? So if you think about like our founding fathers, I mean, they fought a war and they died. They lost a lot of them died, right? And today, luckily, we don't have to. But if we think about we're fighting a war, which I think we both kind of see that, then maybe our sacrifice is just putting our time and attention and money towards building that world.
I don't see it quite in the same way.
Okay.
In that, think about the last 4 years. Money gives you typically optionality, and it gives you a certain lifestyle. Our lifestyle got taken away in many respects, and it hasn't even come back in large part, right? And George mentioned this the other night. He said, you know, if you took us back to like 2019, you know, most of our portfolios are up a lot since 2019. But would you go back in terms of your net worth to 2019 for the quality of life that you had? Yeah, of course. Most of us
because
would
what do
go,
we want money
absolutely.
for anyway?
Exactly.
Yeah.
So that life that you're looking at, the things that are of real value to you, by putting capital behind them, you're generating positive return. Whether you see that in a portfolio number is to some extent less material, right? Like if I know that I can get a high quality food supply automatically all the time, and I know where that food's coming from, I know where my eggs come from, I know where my beef comes from, I know where all this stuff comes from, I know it's not laced with pesticides or injected with mRNA vaccines or any of this other garbage. I'd rather eat that and make another $4 or $5 million a year? No, I wouldn't.
Yeah.
Because what's the point?
Yeah.
Like, I don't need any more money.
Well, I think we're saying the same thing.
All I'm saying is that the value that you, like if you think about value, often we're just looking going, it's a number on a screen.
Yeah.
Right? But typically, what are you going to do with that number on the screen? You're going to transfer it into, you're going to go and buy your meat, you're going to go and buy these things.
Yeah.
Like, well, if you can get the same return by just having those things and having that security of supply, I'm like, that's a return. Education, that's another angle that we're looking at. If I can know that my kids are not being indoctrinated, like what's the price you pay for that? Because that's a price, that's a huge price. That's their entire lives.
Yeah.
If they get indoctrinated into...
And future generations.
And future generations.
Sure.
So, it's like I had this, years and years ago, I would be maybe 22 or something. I remember backpacking through Bolivia. I've done a lot of that, a lot of backpacking, but it was an experience I had. I remember I was down going to, I think it's Valle de la Luna, right?
Okay.
And very poor country. Most of it's like shanties, and you drive through garbage and shanties and poor people and everything else. And there was like this enclave of really wealthy people, beautiful homes, but they all had like 9-foot high walls with razor wire. Some of them had armed guards on the gates. And I remember looking at that and thinking, yeah, these people have got relatively good lives. But at the same time, I'm like, would I want to go live there? I'm like, no. I would much rather just have an average house in the suburbs where my kids can go and play in the streets.
Yeah.
Like, so part of that is what we're talking about. Like, what is the real value?
Yeah.
If your whole world, your portfolio is going through the roof, but your world's collapsing around you, what's the point?
I agree 100%. I put out a long Twitter thread the other day that went pretty viral, and it basically said the exact same thing, because in the Bitcoin community, a lot of people have gotten very extreme, and they think that buying anything other than Bitcoin is a scam, because nothing's going to outperform Bitcoin, so I just put all your money in Bitcoin, and they call real estate a scam. And they think that people coaching and putting out information and selling that's a scam. And I mean, it's just gotten very toxic. And anyway, so I put out this long thread because real estate's a scam, but I'm a father, and I got kids, and I don't like having to move my family all around because the renter wants to kick me out and this and that. I want my kids to grow up next to the other kids. And so I put out this long thread, and I said, look, I feel like a lot of you guys have lost the plot here. Like, you have to understand, we don't want money. right? We want the things money buys us. And to me, my kids growing up in this environment is worth, that's what I want the money for.
Yeah.
That's the whole point.
Yeah.
Like, who cares how much this Bitcoin is worth in 30 years from now? My kids are here now. I won't get that time back. And so anyway, put this long thread.
By the way, I think that's just entirely consistent with humanity. You know, you have any particular asset class, and you have ideologues who come in, and there's no nuance.
No nuance.
It's all lost. That's normal. You'll get it to some extent. We're getting it in Nvidia stock. I just got an email the other day because I wrote an article about just highlighting how the valuations behind Nvidia might not be quite asymmetric to the upside. At 89 times PE, and it's more expensive than the entire German stock market, and I can give you many examples. So, and I got a lot of pushback, but that's because it's made the guy money.
Right.
And of course it's made money.
Sure.
So you have a similar thing with respect to Bitcoin. You have them with any asset class.
But the point of who cares how much Bitcoin you have in 30 years from now? It's the time
yeah.
right now, today. That's what matters with your kids or your family, and put it in
Well,
that.
I think we've lost to some extent that cultural morality, if you will.
Sure, I would agree.
And to some extent, that's also one of the most valuable things is community. What would you pay to have a community that has a similar values to you, where your kids can grow up in that community with those values?
A lot.
I would give a lot of money. A lot.
Yeah. Yeah, so paying to have a good house so your kids can grow up in the right neighborhood with the right community, the right people. So I think that's just a mind shift that people have to think about. I mean, look at how many people are at this conference right here. I mean, those people paid money to come and try to expand their community, right? So some people get it, but it's interesting.
We don't have, I think even that goes in cycles. The whole cultural shifts.
Yeah. I think right now with the rise of the internet, we're becoming more globally connected, but more locally disconnected at the same time.
Yeah, but even that goes through cycles. I mean, I'm watching local communities forming, you know, which literally 10 years ago were not really forming. I've seen it locally where I'm living. I've seen it in parts of Mexico, Costa Rica. You know, you're getting, like, there's communities that are formed online, and you and I are part of many of them, right? So you've got people that see the world in similar views, because we're not geographically isolated to the extent we used to be. And there's many people who will look at that and go, well, that's a bad thing. We don't have the same sense of community. You know, you had maybe the church and the school, and you know, that you were physically forced to largely, some degree, both economically and as a consequence of technology, you were somewhat isolated, and so those communities then formed and had their own value systems. And you could say, oh, I don't really like that one, and I could move to another one. So you had optionality with respect to different communities. We've now formed communities online where you'll see people have, and they can be in these different jurisdictions, and many people literally, that's where their community is, online with other people, and those people can be all over the world. And I think to some degree we're now moving into that physical locality again, because people are finding it's no longer enough for me to just have this relationship, you know, via the internet. I actually need it on a physical basis, because the pressures on my physical location have become too great. Why? Because there's crime outside now, or because I thought it was okay, but my kid just came back from school and he's a boy and they told him to wear a dress. Right? I met a guy in Dubai like that, literally. You know, a very wealthy guy, had his kids at a private school in the UK, on a business trip, comes home, and literally his son comes back from school with a dress on, and he's talking to his wife. He's like, what are you doing? What's going on? Oh no, it's Pride Week, and everyone has to wear a dress. He's like, the hell they do. So he's like a 7-year-old kid.
Yeah.
Okay. So
Wow.
So, he moved, and there's many people I keep bumping into in various locations. Dubai is just one of them, where they're going, look, there are values that are in this location that are more important to me now because they're no longer in existence in the physical location that I was. And so you're seeing physical movement, human capital movement.
Yeah.
And that's going to continue, and I think it's going to accelerate. So the world is reshaping.
Yeah, I agree.
And so those all themselves present opportunities.
Yeah, like look at what's going on in El Salvador. I think that's a good test case. I mean, Bukele has turned that country around in a 180-degree difference in just a couple of short years. And the amount of investment capital that's pouring into that country is just amazing. And he's even gone so far now as I think he's given out like 100 citizenships to
scientists, doctors, philosophers, I think were the main
exactly
ones.
Right. And so now it's sort of like this competition. I love what he said. He talked about the immigration problem to the United States, and he was talking about that specific subject. And he said, I think we need to look at ourselves. He said, we need to ask ourselves, why are people leaving our country? Wow, that's like words of a leader.
Yeah.
And so, but we're seeing this. I mean, we're seeing back to Dubai as attracting a lot of top-tier talent. And we'll start to see where these enclaves are forming and people, the Gulf, so to speak, right, going to those areas. In the United States, we certainly see it between the red and blue states, for sure.
I mean, it's been over our lifetimes, we've never seen that significant a domestic shift internally within the country.
Yeah. Yeah, I mean, when I was a kid, my family moved from Texas to California. But that was because my dad was in construction and the oil market crashed in Texas in the 80s, so we moved to California where the construction industry was booming. So it was an economic move.
Yeah.
But today, to your point I think you're making, is people are moving for different reasons, non-economic, more ideological, right, or something, or community-driven, if you will.
Yeah.
Yeah.
Many factors, really, because they're all interconnected, right? So when you have when a society collapses, it's very difficult for crime not to go up.
Yeah.
It's very difficult to run a business when crime is high, because it's a cost of your capital. It's part of your operating expenditure now has to be allocated towards security.
Yeah.
And it didn't before.
And nobody wants to live in that environment.
Yeah.
Not even immigrants. The immigrants that come to the country were leaving an unsafe environment, trying to come to a more safe environment.
Yeah.
Like nobody wants that.
No.
It's insanity.
No.
Anyway, we covered a lot of ground. I think it's good. Before we start recording, I was saying I just love your viewpoint and your sort of your trend watching viewpoint, because that's sort of how I look as well, right? Like, what are the big trends? And I get it from surfing, right? I like to use surfing as an analogy, right? So, in surfing, we want to know. We can typically see when waves are coming about 2 weeks out, and what we're looking for is a big storm. So typically in the summer, they're going to be coming from the South Pacific, down in like Fiji, Tahiti area, kind of a thing. And we need the storm to get really big. Waves need to get 50, 60 feet. And if waves get 50, 60 feet, we know it's going to send good waves. So then we see the storm forming. We're watching it. How big is it getting? Okay, this one's getting big. This one's going to send good waves. And then we can look at like how far did it spin out, into which direction, and which angle. So where are the waves going to go? Will it be Mexico? Will it be California? Will it be South America? And so then we can trace those waves. It takes about 2 weeks to travel. And then, okay, they're going to be really good in Mexico. Let's go travel down there, right? And then we get in position and we wait for those waves to come, right? And it doesn't always work out. Sometimes the wind is horrible, the tide is wrong, something like that.
But your probability.
But the probability is good.
It's about probability.
And I think of investing sort of similar, right? Like, let's look for where the storm is. Right? You broke one down yesterday about an underinvestment into commodities, but we're still going to need them. That's a storm, right? A policy change is creating a storm. How big is that storm getting? And then where will that money funnel to? How do I go get in position and then just let that money funnel right in? So.
100%.
Yeah.
And part of it's also cycles, cycles of history. I've been fortunate to make money based on macro trends in play and just getting behind them.
Yeah.
And then not trying to be too smart.
Yeah.
I think that's also a risk as well. People try and get far too smart, far too clever.
Yeah.
And try and time things, and they dip in the old adage, never buy a bear market, never sell a bull market. Like, you get in and just ride that trend.
Yeah.
And stomach the volatility that's going to inevitably be with it. And if you do that, you literally can do it once in your life, and you'll be vastly ahead of most everybody else.
Yeah.
And we have in front of us now some major trends unfolding, and I think that's intellectually it's extraordinarily stimulating. Thus far, it's been pretty profitable.
Yeah.
So I don't want to tempt the market gods. So touch wood. Rather don't mention it. But these are interesting times, and it's also in large part the risks that are in front of us are risks that people not in some aspects they're not even aware of them.
Right.
And in many aspects they're aware of them, but they don't quite understand the real risks that are in front of them.
Yep.
I mentioned yesterday with respect to the old risk parity trade, and
Yeah.
the vast majority of people are in some variation of a 60-40 equity bond split.
Yep.
And most of those equities are literally in the Mag 7, and then their bond portfolios are sitting in front of a 5,000-year lows in rate cycles. It's just like whoa.
Yeah.
Yeah. So it's interesting times.
All right, cool. Well, let's wrap it up from there. You said you write a newsletter, a weekly newsletter or email. Do you want to shout that out or talk about your funds?
There's a publication that we put out. It ends up going out every sort of 10, 12 days, something like that.
Whenever you get around to it.
Yeah. It's funny, when I first started writing it was maybe 8-10 pages long. Because there's so much going on now on a macro basis, it's typically 40-50 pages long.
Wow.
In any event, so that can be found at capitalistexploits.at, and that program is the Insider program. A lot of that is and came about as a consequence of letters to collect our asset management clients from Glenorchy Capital, where we manage client money.
Yeah.
So those are the two, Capitalist Exploits and GlenorchyCapital.net.
The man in the arena, doing it.
Yeah.
All right, we'll wrap it up. Thanks.